One.
Is it a key reversal or just another buy the dip opportunity? Bank of Japan, they're talking about tweaking the yield curve and big reaction in the markets. That was your negative catalyst. Q2 earnings season rolls on. We'll be talking banks with Nate Tobik at 8:35. It's pre-market prep on a Friday.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. We got a solid rebound coming this morning. We're up 25 and a half handles, 45.8975. Almost getting back half of those losses from yesterday. You have the buck down after the big rally yesterday, down 35 cents at 101.19. Bonds up a half a point after getting slammed yesterday at 124 and 13/32. Crude hanging out near 80, down 13 cents at 79.97. Hope my gold quotes are right, up 1070 at 1995.90. Silver in the green by 37 cents at 24.61. And Bitcoin hanging out $85. It's higher by at 29,395. Triple D, volatile price action yesterday, key reversal. I guess we can just start talking about the meaning of that. How you doing this morning?
I'm doing good. Just looking, at this market. Nice rebound today. Kind of feels like an opportunity to lighten up after yesterday's action, but maybe yesterday was a one-off. Nobody's got the crystal ball here. Where do you want to start?
I guess
start with these key reversals.
Yeah, sure. Let's talk about what the definition is, and then we'll look at a couple charts.
So basically, what we had happen yesterday in a number of the indexes, in a lot of stocks, was what's something called a key reversal, and that's when a stock or index makes a new high above the previous day's range and then closes below the previous day's range. It's usually the sign of like it usually happens after you've had a significant run up, which we've had. So this is all textbook technical. Sometimes the market trades technical, sometimes it trades fundamental, sometimes it trades on macro. This was all technical. Now, again, there was a catalyst yesterday, Joel. Maybe you should talk about that catalyst just briefly. But the key reversal is basically make a new high above the previous day's range and then close below the previous day's range. And if we just go through here, the IWM did that. The SPY did that. The DIA, which has been on that impressive run, I think it made a new high. Yeah, just barely. DIA did it as well. QQQ did not. Just barely held on to the previous range, but a number of stocks in the QQQ did as well. So that's concerning from a technician's perspective that could be a topping signal. Couple that with a Mike Wilson top here, which we're going to start calling it because we know one of the biggest bears, Morgan Stanley there, and one of the biggest bears on the street in the last 6 months, capitulated 2 days ago saying he's been wrong. So the last bear throws in the towel. You get key reversals yesterday, and then you get this BOJ stuff happening, and it makes you a little bit spooked.
Yeah, but nice rebound this morning. Let's bring in Money Mitch.
And we did our bullish show.
Yeah,
That's what happens. That's what happens. Yeah. You guys wanted to get all bull on me there.
It was a fun show, though. It was fun while it lasted.
It was. Let's talk a little bit about what happened. Of course, the Bank of Japan made a significant change to its ultra easy bond buying monetary policy on Friday. This move really caused some confusion and shock in the market. As a result, long-term Japanese government bonds yields rose approximately 13 basis points. The yen weakened against a strong dollar after experiencing some volatile initial fluctuations. However, of course, the impact on Japanese stocks was relatively minor. But here, it seemed to have made a bigger impact, especially on our market.
It was a surprise policy change. I mean, they've been dovish since what 1933,
93,
yeah,
Since I was
93.
30
born,
years of
guys, pretty much.
dovishness.
Since I was born, they've been dove.
They've been dumb.
Well, they're in, and let's give this perspective. You talk about the eternal only stocks go up. I mean, the Nikkei made its high in 1993. It's been in a 30-year bear market. 30 years, Japan stocks have not gone higher. That's a little bit concerning. But I mean, now it's come all the way back, and I don't know if they did. The Nikkei actually make a new high on this recent move? I don't know if it did, but
What's the ETF? Well, what's the ETF?
The problem is you can look at ETFs and they're going to be making new highs because they don't go back to 1993. ETFs didn't exist back then. Nikkei all-time high. Just Google it.
Maybe.
So right now it's 32,000, but if we go back to for fun to 1993,
wasn't it
it was 1989. I'm sorry. It was.
Here's a good.
It
chart
was
for
38,000 in 1989. It is 32,000 a day. So here we are, 34 years later, and you're still 20% from those all-time highs. So in countries,
EWJ, Joel. EWJ.
Okay, that's what I should know that.
Yeah, the EWJ. But again, that's not going to show any of this because when did the EWJ come into existence?
It shows to 90s. I have data that goes back to 91.
89's the high. You have EWJ? That doesn't make any sense, Mitch.
I'll show you at least. I mean, my
ETFs
charts,
didn't
right?
exist in 1989.
Let's.
In 1991.
I'll just show you my
1997.
Charts,
right? I have.
So here's I have it going back all the way to 91. So this is EWJ. I don't know if my chart made something here, but
how the hell is that? There was ETFs in 1991.
30 years later, and we're down, and we're right.
I don't know.
Right at the same level.
That. Seriously, how? Maybe it was maybe it converted or something from a closed-end fund or something into an ETF.
I can at least tell
maybe
you
that's
right
what it is.
There's
no way ETFs exist in 1991. Chat, you got to help me out here. When the hell did the ETF get created?
I don't know how my chart had it, but
there's no way it was in 1991. So maybe it was a closed-end funds did. Maybe this was a convert. But anyways, pretty cool data. Bring up that long-term chart there again, Money Mitch, because it's giving us perspective.
Yeah.
They said in the 1990s, Nick Brown, our digger, Nick Brown, I tell you, who works in the background here, he's the best digger out there. Yeah, he says in the 1990s, first developed in the 1990s. We don't have confirmation. So maybe it was 1991. I can't believe that far back. EWJ launched in 1996, Echo says. So I don't know where you're getting 1991 data, but it's cool that you have data that didn't exist. So
that's the best kind of data.
Though, Mitch, look here. That is a long-term chart. So you're going back 30 years and you have gone nowhere. And if you could go back to 1989, you would see that we are actually down over that course of the period because we were at 38,000 in 1989. Stocks don't always have to go up, and countries and ETFs don't always have to go up in the long term. Chat rocks. You guys know everything. They do, honestly. There's always somebody that knows the answer in the chat. There's enough smart traders in here and knowledgeable traders that know stuff. And if they don't know, Nick Brown will go find it.
It's bots too. We have bots in the chat.
The bots are good too. The chat GPT bots. They know some stuff.
Yeah, they know. All right, let's talk US. It's 8:09, and we're talking Japan. Let's talk US stocks.
Going back, so just overall market talk. So somewhat concerning. So back to the key reversal talk and the TLT breakdown too. There's a lot of food for all of a sudden the bears to chew on here. Not saying the bull market's over, just saying it's concerning. Could we cool off? Could this be a cool off period? We have been on fire here. Everything's been going up. Could we cool off for a week or two? I think it's possible. Possible.
Today's a day. Today's a day. Today's a really.
They got to bounce back.
Yeah, well, they already are. I mean,
we get some inflation data today here too. So
that's
8:30, 8:30 Money Mitch. What are we getting?
PCE, of course.
So now you got everything, all the balls. So PCE could maybe save us. Intel's trying to save us. We're going to get to that in a second. Ford tried to save us, but then it rolled over. Pun not intended. So go into PCE 8:30, and then. Does that save the market? We will see.
All bots.
I think it's there's a minor save going on right now. I mean, they bought the dip. We're getting back half of those gains. But just from a we did talk some technicals here. I just for the S&Ps today, we're about 6.5, 7 points away from the high close of the move. You know how I like to emphasize. That comes in at 97, 45, 97. The other significance that is you had two other closes in that area on Tuesday and Wednesday. So that's a bit. I mean, if the Bulls are just going to rip it out of the Bears' throat after only one day, then we're going to close back at that area again. But man, if you got caught yesterday in that free fall, I mean, this is a gift, I think. But let's get on to Intel here, trading up a couple sticks, $2.19. Mitch, give us a report.
Let's go. Let's get it. Q2 EPS at 13 cents beat the loss of 3-cent estimate. Sales of 12.95 billion beat the 12.14 billion estimate. Intel sees Q3 EPS at 20 cents versus a 16-cent estimate. Revenues at 12.9 to 13.9 versus a 13.23 billion estimate. Gross margins at 43%. Intel's client computing group revenue was down 12%, and data center and AI group revenue down also 15%. But that didn't matter because they got back to profitability.
Who was it though? What analyst was saying that came out with the downgrade like 2
I know,
weeks
and
ago
the
and said there's no
17 price
path back to
target.
profitability, and here they are 2 weeks later and they're profitable.
Dude,
that might be one of the worst calls of the
yeah,
year
man,
too.
just go get fired, bro. Like,
Somebody
come on, man.
downgraded it and said there's no
Hardest
immediate
job.
path back to profitability, and they literally are profitable 2 weeks later. That's unbelievable. So, anyways,
man.
I don't know who that analyst was, but hide under your desk here today.
This
Intel
was
going
setting
up.
up for this move. I mean, it was pretty technical. It was technical easy call here. I mean,
Came
now,
back down to that 32 area.
yeah, and I mean, look where it went to. Also, now a little technical pullback, also to the highs.
Yeah,
from
I'm kind of mad at
the
myself because
20th.
I did buy this at 32, and then I talked myself out of it and let it go just above 32 on the pullback because you could see the 32, the support. Sometimes just technicals just work. We're breaking out here. You've got the high though to challenge 37.11, Joel. That's going to be where everybody got their stock called away that day, and then we tanked after that options expiration. I gotta think that price has memory. I gotta think that 37 is probably going to be early resistance.
Well, they got excited. I did not think they would trade much over 37, and the algos took it up all the way to 37, above 37.50. So it exceeded that by a mile, or not a mile, about a half a point, getting to 37.62. I'll still look at that area. I think that's significant. We're only 40 cents away. So I think you just got to establish a strong 37 bid today and take that out, get towards the pre-market high. So that's what I'm be looking. It could even be tough to get there. Where to buy this thing on a pullback? Well, I don't think you're going to get a look at the top of yesterday's range. That comes in at 35. So nice move for Intel, finally.
Finally, but does it last? That is the question.
Yeah, that's true.
Yeah, I mean, I would like to see an inside day and just not take out the lows there, right? Inside
you
day.
don't want to see go take out the low.
No, I mean,
today,
just
we got problems.
give me a nice little sideways action day after the rip, right?
Hold
I don't
the
want to see it
gains.
go right back, right? And
Hold the
another
gains.
one that I'm looking at, of course, is AMD. They had some news today. I just want to kind of state it here as they plan to invest about 400 million in India over the next 5 years, which will include a largest design center in the country. So it looks like more and more companies moving to India is something that I think we should all look out for as, of course, what is this? A move away from China, of course. Let's keep a watch on this as we see more investment in India.
Yeah, a couple pops here. I mean, this is just kind of hanging out, near the 110 area, getting a nice pop. I just alert traders, investors that really important to take out this 115 area. You had a high 1505 a couple days ago. Then yesterday, before the big reversal, 1508. So there's your level. That's what you want to take out today. The longer it takes, that's still $2 away with the big rally in the market. So if you can't get to that, longer it takes to get over that 115, maybe more migrate back towards the lows from last couple days, which were right around
Definitely been a
110,
laggard.
111. Yep,
Definitely
been a laggard.
back to the earnings parade here because we had, we have so many companies that reported and a lot of big ones here.
Let's
this morning.
go.
So
Let's
try to
go.
pound these out. Let's do 1 minute in earnings. Time us, Mitch. 1 minute. 1 minute. 1 minute. 1 minute. We'll try to get like 15 in here in the next 15 minutes.
All right, well, here's an easy one. Let's go to T-Mobile. T-Mobile's US Q2 EPS at $1.86 beats the $1.69 estimate. Sales of $19.2 billion missed the $19.33 billion estimate, but everything here looking good underneath the hood. Postpaid net accounts, everything there looking great. Postpaid phone net customer additions of 760,000, best in industry, best Q2 in 8 years. T-Mobile, best of breed.
Best of breed for sure if you're comparing it to AT&T and Verizon, but that's not saying much. I just don't like this industry. Even though T-Mobile might be the best of the three, I don't like this industry. I just staying away from it.
Little overshoot on the downside when you got under 137, but you have a pair of lows in that area. If you get back down 137.30, and then on the upside, look for a possible gap fill at the bottom of yesterday's range at 139.39.
All right, let's go to the next one here. Let's go to Roku as they came in with Q2 EPS at a loss of 76 cents, beating the loss of $1.27 estimate. Sales of 847.2 million, beat the 773.43 million estimate. Active accounts grew to 73.5 million globally. The company said that its operating environment remains largely unchanged for the first quarter, with strong consumer demands for Roku TV models. They also said they're well positioned to re-accelerate growth here, and noted that it saw third quarter revenues coming in at 815 million.
Key reversal yesterday. Netflix stock just goes down every single day. This stock is so far from being profitable here. And I feel like the market is, just kind of, went without this. We've had this huge move in the market, and this hasn't participated that much. There's a reason for that here. Nice 8% pop. If I own this stock, I'd hit the bid.
Stopped right where it should. Pre-market high, 77.39. You poked your head over 77 just a few times here, going back over the last couple of weeks. I don't think you're getting back there today. I think that
I'd sell this.
Yeah, I would too. And looking for a gap fill here. Yeah, 73.80 was the top of yesterday's range. Wow. So it doesn't hold 73.80. I think you got some pretty good downside. Everyone getting their money back yesterday, just on one earnings report.
Thank you. People are like, oh, I'm kind of throwing up after losing $5, and boom, it comes right back. It's like, it's held up. The one thing it has held up for the most of the night.
It's held up pretty well.
Back. That's the good news. The bad news still is there's just major overhead supply at 75 to 77, and we got people spooked. I think we spooked some people yesterday. So I think there's going to be money managers coming in and saying, yeah, I'll take my money and run here. Thank you for giving my money back from yesterday.
I'll keep an eye on it. I know that Zoom's been looking a little bit better also, so I'm not going to bet against it just yet, but yeah, I can see what you guys are talking about. All right, let's keep going. Let's go to the next one that I had a feeling, man, and now I've been waiting for this move. We got it. We talked about this yesterday. Would we get First Solar above 200? We'll take a look now, guys. First Solar Q2 EPS $1.59 beats the 96-cent estimate. Sales of 811 million beat the 720.55 million estimate. Big beat here, guys. Also unveiling plans to build their 5th manufacturing factory in the U.S. The site that the factory has not been determined, but they plan to invest as much as $1.1 billion to further expand U.S. capacity. First Solar, guys, I'm keeping an eye on this. A big part of this was energy starting to come back. Now I'm really watching these.
Do ENPH with this one too, Mitch, because we have the opposite story. 2 solar stocks report the exact same time. It's like Google, Microsoft, ENPH, First Solar going here. ENPH is an epic disaster here today.
Yeah, they came in with an EPS at $1.47, beat the $1.25 estimate. Sales of 711.12 million, missed the 722 million estimate. They do see Q2 revenues at 550 million to 600 million versus 748.8
that is
million.
an epic collapse. in
That
revenue.
is where they're getting destroyed here, right? Is that revenue outlook here on the Q3.
How do you go from thinking you're getting 748 million to 550 to 600? I
Yeah,
mean, the
that's
revenue just
not
falling off a cliff.
not
That's a
what you want to
problem.
see there.
That's a problem. So, I mean, people can come in and say, yeah, buying the dip, but this stock has been a dog for a very long time here now. We were up over $338. The stock has not participated in the rally whatsoever. And maybe these traders, maybe Wall Street actually knew something here because this revenue fall off is significant. They're doing a $1 billion buyback. They're announcing that because they knew how bad the revenues are. So they're trying to stem the tide, try to stop the stock from just getting murdered. It doesn't matter. People are completely ignoring the buyback, which I don't blame them because when you see revenue fall that far, I don't buy the dip on those stocks.
Pre-market low 137.01. Absolutely no reference point down here at this level. Former low of the move will now be resistance, and that's $10 away at 152.15. I'm not even going to talk about the bottom of yesterday's range. You're right, a big disaster. Boy, spread traders, I sure hope you guys had to spread on the right way because, man, this is just a big diversion here. I see the trade at 222.11 and the pre-market highs above that at 23.30. Oh boy, oh boy. Next daily high is not to 229.66. So this is a tough one. If you had to target up in this area, anything over 220, a little bit gravy. Just don't get meta'd, right? You never saw those pre-market levels in meta.
Okay, put the clock in the corner. We're way too long. We're taking like 5 minutes of stock. 60 seconds. Go. Money Mitch. Go.
ExxonMobil Q2 adjusted EPS at $1.94 misses the $2.01 estimate. Sales of $82.91 billion beat the $80.19 billion estimate. And we'll do Chevron with this also, of course. EPS at $3.08 beat the $2.97 estimate. Sales of $48.9 billion beat the $48 billion estimate. So both of these guys, ExxonMobil, a miss on EPS, a beat on sales. Chevron, beat and beat.
And the Chevron was light and it got hit initially, and ExxonMobil got hit initially too. The thing is, the difference about these stocks is they got value investors that are buying dips on these things because these things are dirt cheap. Exxon, Chevron, we know we got the big buyback there too. They're looking for opportunities. So I would just say, unlike, like a Roku that has no protection from value investors, these have protection from value investors. So they dip, value investors flock in.
Well, you dipped under 104. That was the area of the last three lows. So there's a good number, 104.50. Let's hold unchanged. Yesterday's high is up at 106. Definitely got a shot at that. CVX, that had the dip, and that was bought also. Let's see if you can stay green on this one or get green. 159.66 is the close. Work your way up. Yesterday's high, way up there at 62.47.
Yeah, now that we've gotten through the earnings, I'm going to look for ExxonMobil to make a big move to 108. That's just my view. Of course, you guys can check that out on live trading if we were able to nail it. All right,
S&P's lurching higher here. Really, no offers in sight. We're getting back almost
Buy
half
the
of that
dippers
move.
are coming in.
Yeah,
this is an opportunity overall. Let's see what PC. So we can't. It's hard to do a technical analysis ahead of PC. Let's see what this does. But we'll just say this is a nice bounce back here today. So PC comes in. If it comes in light, we might just blast off again. So let's see where that comes in. Comes in hot. Comes in hot.
1 minute's done. Close. 1 minute's done, Dennis.
Go.
Well, you did. We didn't. You did two stocks.
Go.
You did two stocks.
Let's go to Procter and Gamble and Colgate Palmolive. Let's do Q4 EPS for Procter and Gamble coming in at $1.37, beats the $1.32 estimate. Sales of $20.55 billion, beat the $20.02 billion estimate. And then we go to Colgate Palmolive here. Q2 adjusted EPS at 77 cents, beat the 75-cent estimate. Sales of $4.82 billion, beat the $4.67 billion estimate. What do you guys think about these value type of plays?
Procter, both. I don't want to own consumer staples. Same story here. It's just a different day. Consumer staples in a 0% or in a 0% environment are pretty cool, and a 5% environment they're just not cool. So sorry, Tina Trade, dead. Don't need to own Procter and Gamble. Trying to like pick up, your 2.343% dividend. I'd sell the stock and move it in. If you're concerned about being defensive, I'd sell that stock and move it into 5.5% cash.
Only 43,000 shares have traded. You're going to have to take out a lot of paper to open up at this elevated level. 152-day high, 155. You barely got there in the pre-market. I think that's a great level. Where to buy this thing on a dip? What's the top of yesterday's range? Oh, you could definitely get that. 154.60.
Not buying it on dips.
I'm not
The
buying
dips,
it
you
on
don't
dip
want it.
either.
Go
No.
next stock. Too many numbers. One number per stock. Go.
One number.
Yeah, they're complaining in the chat, and I am too. We don't want all these numbers. One number per stock. Give me resistance. Give me a support. Give me your case. Go. Next stock.
All right.
We're hurrying this show. This is the speed round, not lightning round, because then CNBC would give us crap. It's the speed round on pre-market prep. Let's go.
All right. There's only about 2 more that we can cover. And we got to be ready for PCE, so keep your eyes on that, guys.
Go then.
Q2 adjusted
You guys spend more
EPS
time
34 cents, beat the 23-cent estimate. Sales of 871.3 million, beat the 841.62 million estimate.
Stock.
That's DXCM, Dexcom.
Don't care. Next.
You're missing out on this stock,
What about
Dennis.
Ford?
This is a really good investment. I will tell you guys
Ford.
that.
How do we miss Ford?
Because you guys skipped me through it. You guys went straight
You
to
guys
Intel.
are a bunch of little
before
babies
PCE.
today. Holy
Ford.
mackerel.
Holy moly.
I'm glad it's Friday.
All
Go
right.
ahead.
Let's get the
talk too
Ford
much.
motor.
Fords.
We talk too much. Ford Motor
Seriously,
Q2
go.
EPS here, 72 cents, beat the 55-cent estimate. Sales of 45 billion, beat the 40.38 billion estimate. Ford raised their EBITDA guidance there. But one thing that I'll talk about, and I've talked about this with these vehicles, it's all about the margins. They're letting you know here that the EBITDA for the Ford Model E is going to be a loss of $4.5 billion. Yet they're still aiming for 150,000 annual production rate for the Lightning this year, which I don't think will
The Lightning
that
polls,
a little bit better.
I read the whatever report there, another report on the Lightning, because I thought about buying that truck. And then it pulls, and it literally only can, like, you lose your battery in like 90 miles if you're pulling anything heavy. I was like, that's just useless. I buy a pickup to pull stuff. So until they can figure out that battery life on when you're hauling, I'm like, this is just useless. I'm done with Ford. Sorry, done with it. I sold my GM too. Gone. Ford and GM gone.
After that GM report and the way they reacted to it, I just don't see how you could buy Ford up 70 cents from the close.
I don't know who was buying it last night. That was crazy.
That was crazy. All I'll say is $13.50 better hold, or look out for $13.
And also, of course, what was mentioned in the earnings call, Ford CFO says new UAW labor contract will raise costs. Tried to give you guys that outlook way ahead of the time, because when that comes in, I think that's going to affect Ford and
I think the stock's going to be in the gutter before that comes in.
Yeah. Just get ready.
Not
guys.
a fan here, especially if we get any slowdown here. I mean, they've been firing on all cylinders, blowing earnings away, and the stocks really aren't going up. The GM's come up a little bit there, but Ford is coming back down. The EV story, they suck. I mean, why do they suck so much compared to Tesla? They have been making cars for 100 years. Why is Musk so much better at it? Ask yourself that.
Okay, all right. We are
20 seconds. We're going into PCE preview mode.
And we just got
PCE.
back half of the move. Half of the move already, folks. 94. That's a big level on the upside. We're currently trading 45.93. You got a preview, Mitch?
Yeah, I got you right here, guys. So year-over-year outlook for PCE expected to come in at 3.1, prior being 3.8. We'll see what happens there. Month-over-month outlook is expected to come in at 0.2, prior being 0.3. Let's find out what happens here. And let's see if the markets want to shake this bull.
We went 50 cents wide on SPY and 70 cents wide. Nobody wants to make a call here. Now we're just sitting.
Now we're just sitting.
Is it
Let's
in
see
line?
what happens here, guys. Let's see what happens.
The number's not even out yet. We've already had like a 7-point range here. We just made a new high at 95.75. Algo jumpers. First move was up, then a knee jerk down. We're trading right here mid-range. Let's see. Core PCE prices.
All right, waiting to get it here. Should have it any moment now.
Dun, dun, dun,
Dun, dun,
dun,
dun,
dun,
dun.
dun.
Who's gonna beat me? Dun,
Come
dun,
on.
dun, dun.
Holy mackerel, they're still waiting here. I
I don't
I
know.
haven't seen it go
Ranger
on
Rick
CNBC
has it.
yet either. This is late.
Oh, trust me, it ain't only me.
There it is. Point two,
Dig,
point two, in
dig.
line. In line.
In line.
Now they don't know what to
Boring.
do with that. In
Nah, I
line.
mean, in line means the Fed just
Good enough.
continues doing
It
what they're
was
doing.
always good enough. Problem is with all those key reversals yesterday, I would like to have seen a beat here to like really like get you kicking started and start thinking about yesterday's highs. You're getting back half of yesterday's losses here in the pre-market just for no reason whatsoever. I think you're lightening stocks up into this. I don't think you're going to full cash. I don't know if the bull market's over, but the technicals are concerning yesterday. This isn't nothing to drive us, and take over.
Here, yeah.
So I think you're lightening up into today's rally. I think if you were getting hit hard yesterday, you got too many stocks and maybe you should lighten up into it. That's my opinion.
Yeah, really. Very, very mild reaction here. As I said, we had a little pop before the number came out. Right, high close of the move. I gave you guys that number before. That's at 45.97. We had two other closes in that area. Let's see. I mean, but they're not taking it down yet, right? I mean, they're
the bots don't know what to do with it, Joel.
The bots don't know what to do.
No, because it's in line. They're like, they don't know what to do, so they're just chopping around a little bit. They don't know what to do with that. I don't know what to do with that.
No one knows what to do.
I'm somewhat of a bot. I don't know what to do with that either.
Okay. All right. Well, we're hanging out here near the highs of the session. So the Bulls didn't flinch. The Bears didn't flinch. Here we are, pretty basically where we were right before the number. You want to get a couple more reports in before we have our guest here at 8:35?
All right. The last one I'll just bring up here as report is an interesting one. COUR. I know Dennis will say kick this out, but I thought it was a really good move today. You guys can check out Coursera Q2 EPS at 0. It just didn't lose. Estimate was 10 cents of a loss here. Sales of 153.7 million beat the 145.86 million estimate. And it doesn't look too bad. Of course, Coursera is an online learning platform that connects learners, educators, and institutions with the goal of providing world-class educational content. I can let you guys know myself. My wife has actually been using it for a little bit of cybersecurity course, and it's actually not too bad. So you guys see it getting the nice little pop here in the morning.
Yeah.
Nice lift.
Yeah, very nice lift up to an area. I mean, close to 16. I look for resistance here. 1587 up to 16. Three highs in that same area for COUR. What was that one education stock that went absolutely crazy? We had the guy on when the thing was at like $80 or $90 during COVID. Help me out, chat. Come on.
What stock?
It was an online education stock during COVID. It went absolutely crazy.
Well, everything went absolutely crazy.
No, but this was it went like the $80-$90.
No.
Yeah.
Chattel. No, Chegg? Was it Chegg?
Yeah. Did the chat do it?
Yeah. The chat knows everything. They're all over it.
That.
The chat's awesome. Chegg. So if we go Chegg, yeah, you're right. It went from like 25 to 115. It's $9. Oh no, sorry, it's 10 now. 10. Fantastic stock.
Yep. Whew. So I don't know.
But buy those dips, folks. You know it works.
All right, let's go ahead. Let's get to our guest today. And you guys out there, smash the like.
All right, Nate Tolbeck from the Complete Bank Data Report, who told us during the financial meltdown in April not to worry, the banks weren't going anywhere. Well, turns out to be a pretty good call. Nate, how you doing today?
Good. How are you guys doing?
Doing great. So I guess before we go to the banks and the bank earnings and the recovery, could you give us a little bit more clarity on this this BOJ move and the reason it's having such a major impact on the markets?
Well, I mean, so think about this. Japan's a really interesting case, right? Like the market topped out in 1991 and it has been down since then. And we're finally back. It's like if you would have invested at the top, you finally broke even. And so they've had deflation most of that time, and now the market's starting to inflate. And I think it's one of those things. It's like it's upending what they've had now for 30 years. And so it's like uncharted territory in some ways, I guess.
But like is everyone going to start dumping U.S. Instruments and like go? I mean, the rate that they talked about was like, oh, we'll let it get above our go to 0.5%. I mean,
Right.
that's the way the market reacted yesterday. Market's saying it's an overreaction right now with the rebound back, but is that the way you're looking at it?
I don't know. I mean, so I've followed Japanese stocks for a really long time, and it was everyone, so everyone had so much cash on their balance sheet because they were so scared from the crash in the 90s, and they were just earning nothing. And I mean, these things, they were, it was negative interest rates, et cetera. And the fact that they all appreciated like this, everyone's probably sitting on some pretty significant gains at this point. And so that there might, if people are looking to sell, there's going to be a lot of cash on the sidelines from that.
All right, let's talk about the bank earnings here and the banking crisis, the regionals. Let's start with the big banks here. The big get bigger. Let's talk about the J.P. Morgan moving up here nicely. Picked up some assets in the from FRC and other companies. Talk about the big bank earnings.
Yeah, I mean, so everyone picked up some decent assets. If you look all the way down, I've mentioned Farmers and Merchants Bank of FMBL of Long Beach before. It crazy high stock price, but even in their earnings, they're only a couple $1 billion bank. They said we did well because we picked up a bunch of First Republic clients. So everyone's picking those people up. Everyone loved that bank, which is really kind of an interesting thing is clients really liked the bank. Customer service was great. And they just were at the wrong place at the wrong time. And, that was the end of the story. So being able to pick up those clients, that's huge. That it's totally different than the Silicon Valley Bank subset of clients. And those clients are not great. And First Republic, though, that's for anyone who gets them. Those are good customers.
What do you think about the PacWest merger? What was your thoughts there? It was a little bit of a take under. The market initially thought it was going to be massive take under because they started tanking the stock, but it wasn't that bad. What are your thoughts here on PacW going off the board here?
I mean, so same thing. Western Alliance there. It's people like them. It's a good bank, and so it's with a lot of these. There's I guess, there is a sense of brand equity at some level. If you're at First National Bank of Missouri and then it's to First National Bank of Iowa, that same sort of thing doesn't exist. But when you get to some of these bigger banks, what they have that a smaller bank doesn't have is they have borrowing capacity. They have relationships with bigger companies in the market, and they have that market presence. And so there is actual brand equity to those things. So what's interesting is mergers have totally dried up this year. PacWest thing is interesting. If you just look at the raw numbers, yes, there should be a big take under, and there's just going to be a large goodwill account on that one. But based on their brand, I think that might actually be merited.
All right, let's move on to some of the regionals here, and everyone waiting for the shoe to drop. Comerica got hit. That's getting back some of its losses, and then some. PNC, Schwab. Everyone thought Schwab was going under.
That's a crazy one. I mean, if you pulled the trigger on that one, that's the it's kind of the Peter Lynch bank, right? It's like, hey, buy what you know. If you're trading with Schwab and you thought, are these guys really going to disappear? I'll just pick up some shares. That worked out really well for you. And the interesting thing about Schwab is it's like that it was just a fear driven. That was the little crisis. It was
how did they get that tied up and as a regional bank? I don't see Schwab as a regional bank, but all of a sudden they just decided to couple that in, and Schwab was going to have problems. And it went from 80 to 45. It felt like overnight here. I never really understood why. I mean, I wasn't fighting it because when market starts selling, it's hard to be the guy who's the only person on the bed. But why did they like punish Schwab so much for the regional bank crisis?
Well, I mean, so they had a lot of held to maturity securities. I mean, their balance sheet is more long dated, and so they also don't have. They're not out there doing mezzanine loans, construction loans, business loans to the level that other regional banks are. And so it was kind of like, well, they're going to have to raise money. There's going to be a capital call, and that never happened. It was just a total fear driven thing, which is really interesting too, because Schwab's in a unique spot where if they needed capital with all the investors they have, they could have potentially done some sort of a capital call amongst their own customers who have billions of dollars in assets already with them and like the product, and could have plugged that hole really easily.
They never needed to do it.
They never even needed to do it.
So they never even needed to do anything.
They just needed to just wait it out. It was like a real bad rainstorm. It came rolling on through, and they just waited it out.
Do you think they just held on? Do they still got those securities on the books, or they just weren't, or the amount that they had on the books was over?
They all have the securities. Yeah, those aren't going anywhere. It's still sort of a dead weight on a lot of these balance sheets, and people are just so a lot of the ways they're looking at it is it's like, we'll just earn our way out. We're going to be lending at 7, 8, 9%. So questionable whether the Fed's going to raise rates again. I mean, kind of what I've seen is if they do, it's possible we're going to see some loans going up above 10%, commercial loans. So that's, the thing is though, they're borrowing at 8.5% and 9%. I don't think 10% is really, it's not going to stop it.
Nate, when you talk a 10% borrowing rate, does this not hit the economy eventually? Like, there's some interest rate costs here. I mean, everybody's kind of banking. This whole market has been banking, pun kind of intended, on interest rates going down sooner than later. If interest rates stay elevated at these levels for a prolonged period of time, does it not hit corporate profits eventually?
Yes, it seems like it should at some point. It totally seems like it should, and it hasn't, which is crazy. And I think so. My view is I think the Fed's emboldened by this, and I think their theory is the higher we can raise things without stuff breaking gives us more room to maneuver in the future. So everyone's expecting we're going to be going back down to 0% if there's a crash or a crisis. And I think the way they look at it is, if we could get rates up high enough when we need to cut in a crisis, they only need to go down to 3. And so everyone who's hoping for this, we're going to get back to 2.8% mortgages. It probably won't happen. It might be that we drop from 7% to 5%.
Yeah, this is more normal.
Yeah,
they just normalize the interest rates. Like, I mean, we've normalized it.
That's exactly right.
I find that completely horrible, as I still don't own a house. But hey, we won't get into that talk here with that on that, Nate. It's definitely going to be frustrating for anybody that tries to get a home.
So what's interesting is what we've seen is transaction volumes have not necessarily slowed in most markets. A lot of banks say, oh, things are a lot slower. The problem is people are not borrowing as much, but the transactions are still happening. And there's so much cash out there that a lot of the transactions are just cash only purchases. So if you look at transaction volume year over year, yes, it's lower, but the mortgage transaction volume is significantly lower, but the rate of transactions, it's still happening. It's just they're happening in cash.
Might have to buy one of these empty offices. That's the only way I see it happening.
So that is the area in the market that I everyone's waiting for the shoe to drop on that. I think we've pretty much normalized on who's back in an office, who's not in an office. A lot of places have decided that instead of 5 floors, we really only need 3 floors. And there's no one out there to absorb all that extra capacity.
Something definitely to keep an eye out for. Nate, lately I've been seeing the asset management stocks really start to get the lift. Is this an area that we can maybe look to see some opportunity to the upside?
Asset management in terms of
let's say like BlackRock, let's say like Morgan Stanley, banks like that. we've been seeing them start to get the lift, and of course, we keep hearing mentions of potential Bitcoin addition and things like that. And I think that's actually bringing some new investors to take a look at these stocks. What do you think, Nate?
Yeah, I mean, so asset. I mean, I think right now assets are still fairly priced, and so there's nothing really crazy going on out there. And what's interesting is prices did appreciate during COVID, and it's kind of stuck. But I mean, everything is still. I just was talking to an executive who they're going through a leveraged buyout, and it's a enormous leverage buyout, and they're floating this at, I don't know, I'd probably be 7.5%, 8%. And they think it's going to work out. And it's like, so, okay, nothing has stopped. It's just everyone got used to what, what's normal now. So, yeah, I think as long as for the asset, for like a Morgan Stanley, as long as that deal flow continues, they'll be fine. When that slows down, that's when they're going to have a problem.
Nate, any final thoughts here overall in this rosy scenario in the markets? Nice, wasn't everything rally yesterday until the Bank of Japan news? Just and any further thoughts on the financials?
Yeah,
More legs on the upside.
I mean, if you just look at a chart from the beginning of the year, what's the KRE index? It was at like 61, 62, somewhere in there, and now it's somewhere in the early, low to mid 40s. Yeah. And so even if it just gets back to flat, that's a lot of upside. And so
do you think we get there, or do you think there's more? Do you think we're past all these banking concerns? That's what the big question is, because obviously March, April looked ugly. We lost, 3 banks. Are we past it? Are we done now? Like that, we're past these banking problems?
Because what you have is the next thing is going to be commercial real estate. But commercial real estate, most everyone refied that in 2020 and 2021. And so those things are all 3 to 5 year balloon notes. So if at the earliest, we're looking now to 2024, that's the 3-year balloon, and then it could be a 5-year balloon. So everyone's just kind of holding their breath, hoping and praying that there's a way to figure this out before those notes come due. But you've seen the news, there's been a couple office REITs that they just are giving back the buildings.
Yeah, exactly.
And it's like, we don't know what to do with them. And so I think that'll continue. People aren't going back to offices. And to Mitch's point, I've seen there's a great account that shows these things on Zillow where they're trying to convert them in San Francisco. And it's just a cube farm that they put up a wall and a bathroom. I mean, it's the saddest looking thing. You think, who wants to live under fluorescent lights? No one.
Absolutely no one. Nate Tolbig, he's an investor in banking stocks, the founder of CompleteBankData.com, giving us some great information. Nate, pleasure. As always, we'll be dialing you up here again in a couple months.
All right. Have a great morning, guys. Thank you.
All right. Take care, Nate. Let's get back to the markets. How we looking, Joel?
What? It's just quiet. It's quiet. We won't break. For those of you that sold that little pop there, and we won't go through the high. Really tight range here. I don't know if imbalances, I mean weekly option imbalances, maybe month-end options expirations, but eerily quiet. Market not giving it back after the inline PC.
It's important that this market does not get back these gains today, because the bears will run with it if we end up going red. And I'm not saying that's going to happen. I'm kind of like sitting back with my popcorn. I did sell a couple stocks yesterday because I was concerned. I sold my General Motors, which I just spoke of, because I was concerned that this could turn into something a little more troublesome. And again, I just, going into the Ford number and the GM numbers, we're okay. But the EV story here is just so tough with Ford and GM. So it's been a good run for GM. We picked it up near the low, got out yesterday, right near the end of the day there. So it was a good trade.
It just won't go. I mean, the thing with the GM is, just all the great report, all the raise. I think every quarter for the last couple quarters, they've beaten raised by substantial margin. You think that, do you think the stock would be at, 50, 60, $70, but that's not the case here.
Well, the PE's been super low, but the problem is if, we start continue move to EV, they've got to figure it out. They've got to get that. That's where investors are looking. Like, where is it coming from? Because we're not all going to have gas guzzlers in 10 years. It's going to be moving to EV. What I find interesting, if you really want to play EV, is some of the lithium makers have really had a pullback here. So like the lithium producers. So LTHM down significantly from where it was. I'm still long that. ALB, I'm still long that as well. That's been killed.
Ooh.
That's pretty much your biggest one. Trades PE like 9 or 10. Again, cyclical, so that can change. LAC, I know you like this one, Mitch. It's back down near support here at 18.19. I mean, there's some opportunity on some of the lithium plays. If you're really looking, EV, that may be one way to play it on the cheap.
One thing that I've been talking about in the EV space that I feel needs to happen, and I've talked about this multiple times, is that we need the autonomous drive features. That's what's going to get the consumer to say, hey, I need EV versus I just want EV. I think that's what needs to
got
happen.
Tesla. Mitch, great point. That's what got Tesla investors so excited after that David Faber interview, because he said we were 12 to 18 months away from
He
having
even said that
autonomous
we were
drive.
looking at legacy automakers to buy full service drive as a license. So licensing out first full service drive, that's what you want to see. Things like that. I promise
we
you,
can hit
once we get that technology, that's where the consumer is going to go, because the truth is
sure.
we all love our time, right? We all know that time is money nowadays. And if we can be in a vehicle and just continue doing what our daily business, we'll love it. I'm telling you, the consumer will love it.
I just don't think and Elon Musk came in. This is why Tesla went from 170 to 270. Don't kid yourself. It was the AI talk and the full autonomous drive that he said is 12 to 18 months out. I just don't think they're going to be there in 12 to 18 months. I think they'll be there in 5 to 10 years, but I don't think it's like a year out.
I hope not.
I don't think
it's no way. I mean, you don't have the infrastructure.
So I think he's just shooting off his mouth again. Like, he does do that. I love Elon Musk, but he speaks, we know that's his problem. If he has any problems, it's that he talks a little bit, before, maybe, he's just talking. So I just don't think he's going to hit that. So I think it's a game changer. I think 10 years from now, we're all just call our car, it drives us to where we want to go. I can go for a nap for 5 hours when I'm driving down to the D. I mean, that's awesome. I hope it comes next year, but I'm skeptical.
Infrastructure, man. Where's the infrastructure to support autonomous driving? I mean, it hasn't even started yet, at least. But Dennis, I don't think you could sleep for 5 hours in a car.
Maybe I'll try.
But the chat saying something interesting too. It doesn't really have to be EV for self-driving, right? I mean, it could still be gas and just drive itself.
Yeah,
I don't know if we're going to see that either, right? I mean, so I think what we need to see is, like we talk about all the time, the underlying assets get the appreciation first. So lithium, the technology, the battery stations, those types of plays get the appreciation first before we see this massive EV adoption. That's what I feel we need to have. That's why you see Dennis looking at lithium names. That's why you hear me talking about technology. That's why you see like QS continuing to go. And I sold this one too early too. The chat asking about that one. Solid state batteries. Look at that thing, man. I had that thing at $695 was my average.
Blast off. What happened yesterday in that? That chart, Mitch, looks like upside capitulation.
That
looks like everybody get me in. I don't care the price. Buy me at any price possible. That looks like that's a top if I've ever seen one. When you have a blow up, when you see a stock go from 10 to 13 in a split second and then give it almost all of it back. I'm like looking at this thing up 5% today and thinking, actually, like, I think you've missed the boat in this one. And Mitch, you were on the boat early. You just sold too soon. That's what me and you always have. You know what we do,
man. We're traders.
Me and Mitch have that problem always. We get in.
Go south.
Good entries and crappy exits. Good entries and crappy exits. I should get this shirt because that's me. Good entries, crappy exits.
I'm gonna make it for us, Dennis. All right, let's do a little ticker time. Where do you guys want to go? Maybe if you guys see anything in the chat there, you guys want to touch, we can definitely get to it.
China. Let's go to China for a second because they
China
really are moving here today. I don't know if what the headline is. It seems like there's a headline all the time, but FXI is up 4%. Alibaba's up 3%. JD.com's trading up 4% here. You got XPEV, I believe, getting an upgrade. JP Morgan I think it was. I might be
Yeah.
wrong on that. I'm going from my memory.
Really,
It's
what's
getting up
helping, I think,
6%.
here is a report given out by Goldman Sachs, and Goldman Sachs in the report stating that hedge funds are quickly snapping up Chinese equities after the Politburo meeting this week. And it said that the higher inflows were led by mainland A shares and then Hong Kong listed shares, while US listed Chinese American deposit receipts. Mainly internet companies saw smaller inflows, the report added. And this is a report given out by Goldman Sachs.
Nice pop in the FXI. I'd rather see it come back down to 29 for support. Baba trying to get in. I mean, that's what you're waiting for. You're waiting for the political environment to change over there. Baba having a nice pop at 98.50. Where are all these highs at? Well, 98.49. Make sure you get if you're buying this one off the open, you want to see a sustained bid 98.50. Poke your head into triple digits. We haven't been in triple digits since early April.
Yeah, and I think that's one thing that I always pay attention to with China when they're mentioned rumors that are going to come, like meetings like that. I try to jump all over that. That on Monday was a nice, easy trade here for China stocks. We'll look to see if they continue going. I do see maybe a little bit of upside.
On the pull, it seems like they always get a pullback, but it seems like those pullbacks have been buying opportunities lately.
Yeah. All right, let's go to one in the chat there and seeing multiple mentions here.
Sure.
Let's go to this is an interesting one that's just been moving. Tupperware, man. Who has Tupperware?
This Reddit? Is this Wall Street Bets?
Yeah, this is the short. This is that short kind of life.
Is this Wall Street Bets?
Just look at this stock,
from
man.
the gutter into the stratosphere.
I don't know, man.
It's a huge
I can't
move.
trade this.
Normally, like I would think five, like not gonna saying it's going to $5, but when they went from 350, I would think 5 would be major resistance. Just doing the technicals here, it's in rocket ship mode, so anything can happen.
Yeah,
I think if you're investing in it at this point in time, I think 6 months from now you'll be very upset. I think it's gonna probably eventually give it back, but we know in the short term things disconnect from fundamentals. They get on a hot story, they can go anywhere, can do anything. So I would just say it's like a hot potato. Don't get stuck holding the potato, though.
Just real short-term technical on this one. You had a big day yesterday. You backed off. If you're looking for more on this one, take it through 375. That was your high from yesterday. Not too far away from it. Might as well do if we're doing these kind of things. Why don't we do Newell Rubbermaid and that stock?
Newell Rubbermaid has nothing to do with this. It just had earnings.
The shoes with holes finally might have holes in their investments as Crocs starting to really break down. What do you guys think about that one?
It got upgraded here today. I'm long it right now just because of the upgrade, so I will sell this. So
man, you're brave. You're brave.
Yeah, no, I just bought off the upgrade yesterday. I thought it might have a bounce back today. I intend to sell this at the open though.
Yeah. We'll see what happens. What do you see on this chart, Joel?
Oh man, it tested the low of the move, so just punished for its report.
I just looks head and shoulder to me, man. Do you see that head and shoulders on the daily? Top right? Oh man, that looks head and shoulders as I've ever seen one.
It's just a nasty stock, a nasty chart. I mean, they gapped down after earnings, battled back, and now right back at 100. I mean, I don't know. People are buying their Crocs. Pre-market high 105. So if you're looking for more follow through on the upside off the upgrade, got to get through 105. I don't even know. Yesterday's high way up there at 110.38 for Crocs.
And of course, we could just take a peek at Nike. How's that's going to maybe play into it? Nike's just been hanging on here. I don't know which way to call it. I'll just be honest. Sometimes I know. I don't have any read here on Nike.
Consolidation's been trading 108, 110. Kind of broke down yesterday, but multiple lows just under 108. If it holds that, go back up to the top of the range here at 110.
I've got an opinion on Nike, and I think it's going lower. I think you got so much resistance here at 110. I think that it hasn't participated in the recent rally, and I think there's a reason for that.
Okay.
I think there's, for whatever reason here, I just got a feeling. Spidey senses are telling me that this is going lower. Just my opinion.
All right, going to wrap things up here on my end and trading right near the highs of the pre-market session. So PCE in line, not deterring the bulls yet. Let's get a new closing high for the move, and that would be above 45.97. So, gonna wrap things up on this Friday. Chat, thanks for the good information and fun show. We'll be checking in with you guys later on today.
All right, let's start the wrap up here, and we'll be looking at to see what happens. SPY is just continuing to climb right now. We'll look to see if we can continue to climb. I think one of the things also is that every single time we get these downside actions, it's going to shake a lot of the bulls, right? I think the market's trying to shake some of the
Yep,
bulls here.
shaking me.
And I don't necessarily think that I want to jump to the bear train too quickly. Normally, I am on that side.
That's a
I'm
good
like,
point.
yeah, let's jump on it really quickly. Let's just grab it. But the truth is that unless we start really breaking down, let's say like right now on the SPY, that would be like 437s, like where the 50 moving average is, 436.15, something like that. But we keep holding 9 EMAs. And if I see 9 EMAs holding, that just tells me what? That stays with the momentum. 9 EMA, the reason I use that is because it's a part of the MACD crossover line, and that also is a way that people look for momentum. So you see this light blue line and how we keep going above it, we come back to it, we catch it, we come back to it, we catch it. So until that breaks, until I see price down here and the blue line above it clearly, trend still to the favor to the upside.
I'll say this day is epically important because we had all these key reversals yesterday. We need to hold these gains and get this market drifting back higher. The buy the dippers need to emerge. If we take out yesterday's low, that would be a major problem. So if we take out yesterday's low, the bears are really going to be starting to toot their horns. So you got to make sure that we don't take out the 450, 155. We're 40 handles above there now. So you've got lots of room. So I would just say today is very important. We're coming, we just have lots of earnings. Next week is a huge day. It's like 300 companies reporting every single day. So we have lots of fundamental
Amazon
information
comes
going
next
to be
week.
coming at us too, which will trump technicals. But technically speaking, this market had a really ugly day yesterday. It's important to bounce back. It bounces back. That keeps the bull thesis intact. If we take out yesterday's low, Katie bar the door, you're going to see a lot more bears coming back in this game.
2 stocks that I'll keep my eye out for some good indicators. You can tell me what you think about this, Dennis. And I'm going to be watching Netflix to see if it can come back to the green. And I'm going to be watching Microsoft
every day
to see if it can go back. Right.
Netflix has been just an awful, you'd think eventually, this is what's somewhat concerning to me too. And it had another key reversal from the previous day there yesterday. But what's concerning about Netflix is it's not bouncing yet. So you would have thought if we were full on bull mode, that they would come into stocks like this and start buying these things back up. And it's not bouncing. They look like it wants to go to 400. So Tesla's been the same story, really. Not really bouncing here after the disappointment. We've seen, in the last earnings season, we saw when stocks were dipping, they were getting bought back fairly rapidly. Remember, we bought Airbnb. I bought Airbnb off of the dip. It took a little bit, but eventually it did get bought back and obviously turned into a really good trade. I sold half of that yesterday. But I mean, this is just concerning, or yet the day before. No, yesterday. I think it was yesterday. But this is just concerning that some of these main companies, the Netflix, like maybe Microsoft, everybody's like Kramer's telling his people, buy it to buy the dip. Well, it just made a new low again here. So a little bit concerning the tape action. Meta tape action, not great yesterday too. So here's the stock that was driving the bus. It was 330 in the pre-market. It didn't even come close to opening there, and then it gave half of it back. So we're just saying, I'm not saying the bull is over. I'm saying the bears have a case again, where a couple days ago, it looked like full bull mode here. Now the bears have a case. And you know what? As a trader, you are entitled to change your opinion as much as you possibly want. As an investor, you want to stay long. Add some cash when you think weakness is coming. But as a long-term investor, I don't short stocks. I never short stocks in my long-term portfolio. I short stocks in my trading account, not my long-term portfolio. I'm always staying somewhat invested, balancing the cash. If I think we're a pullback, I raise a little bit of cash. I think we're in bull mode, I lower the little bit of cash. I'm in the kind of environment here where I've already had quite a bit of cash, and I almost want a little bit more cash. I was like 55% invested yesterday, like 45% cash. And the cash ain't that bad. I mean, it sucked when you're 45% cash and you're getting zero. You have 5.5 on your cash. It ain't that bad. So I just look here and I think We're overextended. It was a really ugly candle yesterday. I'm getting a nice bounce back here today. I think there's some money managers that might say, I'm going to just take some profits and run here.
We'll see what happens today. Like always, we got to be quick and nimble. We'll see if the market does turn around. And right now, it seems like I'll be watching some of the big boys, and we'll see what happens in the market today. Like always, you guys can keep up with everything Dennis Dick does, Triple D Trader on Twitter. Give him a good follow. Always good to have you, Dennis, and we'll see you back on Monday.
Thanks, Money Mitch. Have a good weekend, everyone. Thanks, chat. You guys and girls are awesome. We always have questions, and you guys have answers. That's why we love the chat.
That's what it's all about. Have a good one, Dennis. And now to get you guys over to live trading, that's coming up next. Don't go anywhere, of course. We're ready to get into this market and see what we can pull out of it today. I still got 4 swing trades on. Took some profits yesterday in Micron, so that was a nice little swing trade. I have a couple on today that are looking pretty good. One of them specifically I'll mention right now, which is BJ Wholesale's Club going higher. This is one that I've been trying to play off of the Walmart and Costco kind of sympathy. This has been in kind of consolidation station down there. I've had this one for a couple of days now from 64.13s. We'll look to see if it keeps driving higher. That's definitely one on my radar. But if you want to find out some of my other swing trades and maybe a new trade that I take today, come over to live trading. That's where I go ahead and take some live trades and tell you guys all about my trading action. And of course, we got Lord Ryan, Nick Brown to get you guys some good news. And if you guys have any catalysts you guys want to cover or do a little bit more deeper dive, of course, Nick Brown is in the chat here to help us out. And he's over on live trading. So come over. You don't got to go anywhere. Just stay right here and we'll redirect you right to live trading. Let's keep it going, team. Let's see what we can get today. It's time to rise and shine and get ready for this market. Hope you guys enjoyed pre-market prep.